So very good morning everyone. Let's quickly take a look at one question from India 40. This question is all the way more important because this was asked in your November 2024 exam. Shaurya Limited owns a building A which is specifically used for the purpose of earning rentals. The company has not been using the building or any of its facilities for its own use for a long time. The company is exploring the opportunities to sell the building if it gets the reasonable amount in consideration. Following information is relevant for Building A for the year ending 31st March 2022. Building A was initially purchased at the cost of 10 crores. At that time, the useful life of the building was estimated to be 20 years, out of which 5 years have been expired as on 1st April 2021. The company follows SLM for depreciation. During the year, the company has invested in another building B with the purpose to hold it for capital appreciation. The property was purchased on 1st April 2021 at the cost of 2 crores. Expected life of the building is 40 years. As usual, the companies follow the SLM of depreciation. Further, during the 2022, the company earned or incurred following direct operating expenses uh, relating to the building A and B. Rental income from building A is 75 lakhs, rental building B is 25 lakhs, sales promotion expense 5 lakhs, fees and taxes 1 lakh, ground rent 2.5 lakhs, repairs and maintenance 1.5 lakhs, legal professional 2 lakhs, commission brokerage 1 lakhs. The company does not have any restrictions and contractual obligations against property A and B. For complying with the requirement of Ind AS, the management sought an independent report from the specialist as to assess the fair value of buildings A and B. The independent valuer has valued the fair value as per the valuation model recommended by IVSC. Then fair value has been computed by method using streamlined present value of future cash flows, namely discounted cash flow method. So the estimated rent per month per square feet for the period is expected to be in the range of 50 to 60, and in this further expected to grow at the rate of 10% for each of the 3 years. Weighted discount rate being used is 12 to 13%. Assume that the fair value of properties based on DCF method is measured at 10.5 crores. The treatment of fair value of properties to be given in the financial as per requirement of India is what would be the treatment of building A and B in the balance sheet of Shaurya Limited, and as the income generated purpose income on the building is presented in the P&L. Provide detailed disclosures and computations in line with relevant Indices. Treat as if you're preparing a separate note or schedule of the given assets in the balance sheet. So Farhan, what happens is if you read this kind of questions, your mind tends to panic because the problem will go, question will go to 2 to 3 pages, so there's nothing to read. So let's quickly take a look at what is expected from you. And this question came for 10 marks in your November 22, but it's a November 24. Very less chances it will be asked for again 10 marks, if at all. Maybe question 2, or a lot of chances for this coming in 8 marks this time. So you need to all the way more speed up in this. So first thing you got to start with the relevant key terms from the standard, that is investment property is held to earn rentals or for capital appreciation of both, and this 40 shall be applicable in the recognition, measurement and disclosure of India investment property. And also investment property shall be measured initially at its cost. After initial recognition, an entity shall measure all of its investment properties as per Ind AS 16. So the measurement and disclosure as follows. So if you see the the opening balance, that gross amount was given, that is 10 lakhs, and also additions during there is 2, so the closing balance will be 12. Immediately you got to keep in mind the rupees in crores. Don't miss out on these things, very important aspects. And come moving on to the depreciation computation as per SLM. So opening balance is 2.5, depreciation during the year 0.55, so closing balance will be 3.05 crores. Your net balance will be 12 minus 3.05, that will give you 8.95 crores. So if you do till year, 2 marks will be guaranteed, or maximum 3, because you once you mention all these things, that is the relevant terms from the investment property, if you done it, then maybe you might get around 2 to 3 marks. And moving on to the next, the change in the carrying value of investment property for the year 31st March 2022 are as follows. So rental income will be 0.75 plus 0.5 rental income combined of A and B, and the total direct expenditures, be very careful with this, what all things to be included, what all things to be excluded. So if you see, let's quickly take a look at what all things we have considered. So sales promotion expenses, fees and taxes, ground rent, everything to be included in this. So 5 plus 1 plus 2.5 plus 1.5, so that will give you 5 plus 1 plus 2.5 plus 1.5 plus 2 plus 1, so that will give you 0.13 crores. So profit from investment properties before depreciation direct expense will give you 0.87, that is 87 lakhs, nothing but 1 crore minus 13 lakhs. And giving impact to the depreciation 55 0.5, so that is the profit from the earnings from investment profits before indirect expenses is 0.32 crores. So if you're done till year, 5 to 6 marks is guaranteed. And moving to the last aspect of the problem, disclosure note investment properties acquired by the entity. I'm specifically highlighting the stepwise marks also, so that in case if there is shortage of time, you will know till where to rate. You can apply the same logics in other questions also. So the investment property of A and B, as of 31st March, the fair value of property is 10.5 crores and the valuation performed by the independent valuers. And also the company considers factors like management intention, rental agreements, lease road, etc. So the company has no restrictions. You need to reproduce these terms. Those are very, very important, because what happens is FR means you will just compute the problems and leave it. But this steps carries a lot of weightage, because that is specifically asked in this particular question. So now the company has no restriction on the real estate or investment properties and no contractual obligation to purchase, construct, develop. So hence the valuation as per DCF will be, so what are significant unobservable inputs are estimated rental value per square feet, which is given, and also rent growth per annum and the discount rate. So rent in this case is given as 50 to 60, 10% for every years, and 12 to 13%. That is it. This is the what is expected from you. So first 2 to 3 marks, then 3 marks, and if you written till all these things, then maybe another 2 marks for this. So 8 marks will be in your pocket. Fairly straightforward question, provided you solve it, practice it on. That's the main objective by sharing this. Hope you made full use of it. Practice it thoroughly. All the very best. Keep going. Best wishes.